The IRS has declared a tremendous victory to have successfully processed the spring tax returns, even with a 27% tax force reduction from the prior year. That's maybe declaring victory a little too early. The fact that you receive tax returns does not mean it's a victory. Right now, the IRS is projecting the ability to have a 4,000 person reduction in manpower because of improvements that they've experienced from automation and the use of artificial intelligence. Just because you have AI and just because you have automation doesn't mean the work is going away. They can use these tools to improve the selection of returns that need to be audited, and they can use it to generate automatic underreporting letters to people. We call these CP2000 letters. In 2018, when the paying of taxes for crypto gains became a real big topic, it was observed that at that time, less than 10% of crypto investors were even reporting their crypto income on their tax return. Since then, it's been held pretty steady around 75% of crypto investors are not reporting their crypto income on a tax return. We think this is still holding true, maybe closer to 70%. A recent study by CoinDesk suggests that it's actually a far higher number. There's basically a massive non-compliance function here. And this appears to be continuing even with the issuance of the 1099 DAs, because the 1099 DAs have not provided clarity to a taxpayer on what he's supposed to report on a tax return. Many people have experienced their tax preparer where CPA has basically said, no, I'm not going to do your tax return. I'm not going to handle any 1099 DAs. This is far too complicated. Why is this? What's surprising to me is I have many customers who the length of their 1099 DAs have more pages than their tax return. Think about that. The 1099 DA, this is its first year of implementation, and I would say the IRS knew that it would be rough getting started, so they didn't require cost basis to be reported. Internally, I can see that they have not integrated the 1099 DA into their internal transcripting system, onto the breakouts of how they do transcripts for the returns as well as income. The implementation is rougher inside the IRS. And I would say at this point in time, in its first year, I would say the 1099 DA has not been a success. It has been a large failure because it didn't achieve adequate goals. One goal of the 1099 DAs was to inform the IRS of transactions that were happening. It actually does a good job in terms of telling the IRS about things. However, they have failed utterly in providing a document that provides clarity to the taxpayer. So many people have contacted us saying, I just don't know what's on here. People are claiming that transfers are being reported, which they shouldn't be, but they can't tell that from the forms that are given to them. There are many different formats for a 1099 DA from different exchanges. They're confusing. The IRS made it extra confusing by coming up with new boxes that require checking if you're doing crypto trading on the 8949 form. It just made it confusing at a whole slew of levels. And it remains to be seen if this was going to be a success or not. Because what happens is that the IRS just gets all this data, but it gets a bunch of tax returns that are all poorly done. And then they audit them. They find that the reason they're poorly done is because the 1099 DAs were confusing. And that's only created make work for the IRS and created frustration. That can have a negative feedback on the IRS's reputation. So I think they've got a long ways to go with the 1099 DA. They need to make substantial enhancements, summarizing the data into formats that the taxpayer and the tax preparer can quickly and easily understand and plug into their tax return. Because right now they've made a form that for most taxpayers is just impenetrable. They just simply have no idea what numbers to put on their tax return. In my opinion, for the 2025 tax returns, the 1099 DA has been a disaster for the taxpayer. Coinbase and CoinTracker, who is a partner with them, have come out with a report that said that 61% of crypto investors are unaware of the new IRS 1099 DA rules. And that means that there's a lot of people who are going to incorrectly do their tax returns. So I don't think this was a good year for taxes for crypto people in terms of understanding how to do their taxes. I think one of the biggest problems is people don't know when their crypto trading is taxable. Most people still have this thinking of, well, until I cash out, I don't really make a profit. Even though they might be switching from one coin to another coin and experiencing gains along the way, they don't mentally think it's taxable until it goes to cash. So this is still a problem, and the 1099 DAs did not clear that up. It provided so much data and broke it out in so many different ways that it just created confusion for the taxpayer and for the tax preparers. So I think that the IRS has a long ways to go to resolving this problem. They've got a long ways to go to making it easy for the taxpayer to file his crypto taxes. A taxpayer, when he gets a 1099 int for interest, he looks at it, it's very clear, it's like a little half a page. It says, here's box one, total interest, and you plug that into your tax return. Very easy. 1099's made it very easy to do your taxes. But then the 1099 DA is a complete design disaster. It's unpenetrable to the average taxpayer in terms of what information on that I'm going to put into the tax return. And in fact, I could argue to you that people have multi-page 1099s, 20, 30, 40, 50-page 1099s, and not one of those numbers is an exact number that you'd put into the tax return. Why? Because how the IRS has required the information to be broken down. They have not made it accessible to the taxpayer. They have failed the taxpayer in the design of the 1099 DA. They have failed to put together a document which is clear that it helps the taxpayer prepare a tax return. In other words, it sets the taxpayer up for examination audits for making mistakes of no intent of their own just because the documents are too confusing. This is not good. The IRS has to make significant changes in terms of how that document looks. And basically, they need a very concise, clear summary that exactly maps to what they need to do on the tax return. This is what's lacking.